Right, good afternoon, and thank you for joining us as always. This is the Educate Trade YouTube channel on the 21st of February. It feels like a Monday, but it is most definitely a Tuesday, and Tuesday are normally the days when things really get going in the week. So hopefully we can bring you a little bit more life this afternoon than those of you who are watching markets yesterday saw after 2:30, where very little happened on President's Day as expected. So Russia's delusional leader and small prick Vladimir Putin has been on the wires a little bit today. He is talking of nuclear threat. He suspended a nuclear arms treaty, which is now put onto combat duty, obviously provoked by the West to do so. He says he could also start to resume nuclear tests, which are also off the table as part of a current treaty that was due to last until 2026. They're saying it is impossible to defeat him. Oh, let me just quickly shut this down. There we go. Yeah, impossible to defeat Russia on the battlefield. Obviously, they still control about 1/5 of the Ukraine and in the eastern part predominantly. But yeah, they haven't made too much in terms of new progress. I heard some of the speech saying that he's now looking at rewarding those who work in the military with potential housing, and they're looking to motivate a new wave of recruits to come through by promising them residence, homes, and effectively trying to pay them if they get back alive, of course, with potential properties which they're intending on building soon. So they are looking to kind of bolster things. The nuclear threat is a new one. I mean, he has mentioned it briefly before, but this is the first time they've actively moved away from this particular treaty. So yeah, interesting to see how that develops. They're saying they're not going to move first on their nuclear tests, but nevertheless, a year ago they said they weren't going to invade the Ukraine. So who knows what is happening in that man's mind. So onto the markets, what was happening this morning. So we had some decent moves on the DAX this morning, as you will see here. From the open, we had an initial grab higher before the selling really came in. We took out this high volume node and sold off quite aggressively before we started speaking at 9 o'clock. It was almost one of these sort of sell the rumor, buy the fact sort of scenarios. We're right back at pretty much to the price at which we opened on the DAX today. So it doesn't really tell the story if you're just looking at it at 8 o'clock and where we are now. But yeah, some significant downside there. From the open, we're looking at best over 150 ticks to the lows, and then giving it all back as well this morning. So enough volatility out there. We're seeing this a lot in markets at the moment, that they're moving and then snapping back pretty quick. Perhaps to do with these like 0 days to expiry options that are in play at the market a lot at the moment. So it's a really big part of the options play that's going on at the minute. Don't forget, of course, that the major option market had its option expiry on Friday. So this is often an opportunity for markets to take new direction as participants don't have the same hedges on that they did have until those options expired on Friday last week. This is bringing someone who I follow quite closely, Jem Carson, who's a good volatility trader, is saying that this particular week is a window of potential weakness for stocks. And yeah, to bear that in mind for going forward, the hedging isn't quite there to the downside, so there is more room for potential bumpy rides lower if we get that this week. Failing that, there's a hell of a lot of expiry through to mid-March. So yeah, the third Friday of March is always a big option expiry. So perhaps we will continue to see this grind higher, which I can illustrate here on the daily chart on the DAX. If you look at the move that we've had since the start of the year, it's been pretty green across the board most of the time. Nice grinds higher, and now we're granted since the start of Feb, we're very much range bound, but yeah, it doesn't take away from how aggressive that move on the upside was as we look back in January. So what else have we had other than Vladimir out today? We've had some data come through. All the PMIs were out this morning. Started in France at 8:15, Germany 8:30, Europe at 9 o'clock. The biggest mover, arguably, was the flash manufacturing and services PMIs out in the UK at 9:30. These were much better than forecast. Anything below 50 is a contraction, and we're expecting contraction in both readings. But the services one, which we're more of a service-based economy, as most of the Western world is these days, and the services component is arguably more important. As you'll see down here, for example, the US services is seen as a high impact expected, whereas the manufacturing is deemed only medium impact. But nevertheless, both of these came in better than expected. Still in contraction on the manufacturing, but very much in expansion territory, plus 50 on the services PMI. And obviously that had implications on the market, as we'll see here. We had a lovely little pop on the figure. A look at this, maybe even on a 15-second chart, might give you a slightly better view that this was very much catchable, even if you were slow off the mark. even if it took you 15 seconds to get long on this, you were never really offside. We've had higher lows, higher lows, higher lows pretty much until about that 10 o'clock period when we gave it up, perhaps around 10:02, when we got the first kind of swing low in here. So now we're kind of still kind of anchoring around those sort of levels. So a decent move higher on the pound against the dollar and against the basket of other currencies today. Doing particularly well, or was, against the yen this morning, with very little in the way of pullbacks until after 1 o'clock today. So yeah, nice rangy move, or nice directional move, should I say, on the pound this morning. What else have we had in terms of data? We had Canadian CPIs. This was coupled with the retail sales at the same time, which can often cloud things. If you are looking to trade one piece of data, adding in a second one for the same economy can make things slightly tricky. But the initial kind of headline figure, the main headline CPI, was softer than expected, and we're expecting a 0.7 figure, got a 0.5 figure for CPIs, and we saw an initial move in the CAD, but that has continued as the Canadian dollar weakens on the view that they've already kind of hinted that they're not going to do any more rate hikes, but perhaps this slightly softer inflation figure than the market expected may give participants feelings that the pivot may be coming slightly sooner than the market thinks. They're the kind of two big data releases we've had this morning. Obviously, Vladimir has been on the wires. We've got Lagarde up at 7. Between now and then, we have the US equivalent of these PMIs out at 245. So I'm not looking to do a great deal on the open today. It's not going to give me a huge window of opportunity in order to get in and get out of positions, knowing full well that we have data out 15 minutes after the open. So when I'm looking at 2:45 data or 3 o'clock data, which we also have actually in the form of existing home sales, I don't like putting risk in a market unless I can feel like I have free, clean air ahead of me to try and capitalize on that. And given 15 minutes is a quick turnaround, even by my standards, on the trade. Do bear that in mind if you are holding things around 4:03 today. There is some data expected to come through. So again, we're expecting contractions as we were in the UK, 47.3 on the services, 47.4 on the manufacturing. The average beat or miss has been around 3 or just shy of 3 on this. So I'll probably need a print in the 50s, positive territory on these figures in order to motivate me to take a trade on this one, but might be worth having a look at as we get to 2:45. Things should hopefully clear up as we get through that 3 o'clock time print as well. Housing data has been a lot better, actually. I think the mortgage rates are down a whole percent, really. The kind of credit is easing, and credit financial conditions are easing quite a lot over the past month or so. Mortgage rates in the US are down about 1%, even though we obviously haven't seen lower rates in real terms in the US from the Fed just yet. So that's something that is interesting, because the US housing market represents about 20% of GDP. If there are real bottlenecks and slowdowns and crunches or crashes in the housing market, then it can have a really detrimental effect on GDP in the US. That figure, in fact, is out later on this week. Where are we? We've got the GDP figures out on Thursday. We've got the minutes actually from the previous Fed meeting out tomorrow night at 7 o'clock. So there are some big figures out of the US this week, coupled with the core PCE figure, which is the Fed's favored inflation metric. So let's have a look at markets just as we approach the open. I'll take a look at the US markets, which have been very, very soft when you compare them to the European markets. We mentioned this with the DAX kind of bouncing back and kind of getting back to where it was at the open. The US is pretty much at its lows across the board. NASDAQ just having a look at the lows there. S&P at its lows pre-open, down not too far away either. So very weak start to the day. The US bond markets are very soft as well. Dollar isn't giving too much in terms of strength, but it's very much not giving much away in terms of weakness. We're right on the point of control for the day on the dollar, so not too much there. I see the VIX is nudging highs, but perhaps the VIX isn't as quite the indicator it was before all these same day options came into play. So you've got an interesting level here at what's just above 60s on the Dow. That might be an area of liquidity that was to grab. Another 176 level or so on the Nasdaq if it is really aggressive. Let's have a look at the order flow as we approach the open with 10 seconds to go. You can see that these big orders just before the open there got taken out, and we do have a slight balance in the book. Oh, this is the Nasdaq. Let me bring over the S&Ps, which can give you a lot more information than the Nasdaq. Where are we? We had a big order sat here until around 1:30 today, and that got pulled. We just tagged it, and now the open comes through, and we'll see what the first few seconds of trade have for us. So we can have a little bit of a gap on the open there. Nice move up off this previous kind of demand level that was taken out in real terms. Is this being echoed in the Nasdaq? Let's have a look. The Nasdaq is starting to snap back from this area around 35. So we had a lot of trade before. Often these kind of support levels do become resistance. Let's see if we do get some more selling from these levels. Big orders sometimes flip the book. You normally would see them in here. You can't see those orders on the other side just yet. But if we do start to get some heavy orders above it, perhaps there will be some sort of book in here. Let's look back at the S&Ps, because as you can see here on the Nasdaq, you get very little in terms of orders. It's a very thin market. You're looking at what, 30, well, there's a 51 contracts down here. You have to look all the way up to 70s to see 100 contracts in play. Whereas if you look at the S&P 500, at pretty much every price, you've got over 100 contracts in the market. Some bigger ones, we've got 250, 254 above and below here, one at 40, so about 10 ticks lower, and one about, 7 ticks higher than where we are currently. And that just came in, that order, just after the open. As you can see here, wasn't here before the open itself. That's a new order place. The open came in. So let's have a look at the charts themselves. Just seeing, a bit of didn't quite grab that liquidity on the Dow. The Dow's been the stronger of the 3 US indices in the first minute or so of trade. But still very much on the back foot on the S&P. As I mentioned, there is a kind of window of weakness, as Jim Carson was saying this week. So I wouldn't be surprised to see some softness in US indices as we get through. I know I mentioned that this morning on the Zoom. It's very much playing out in the US more so than it is in Europe at the moment, with the FTSE and the DAX not far away from where we started, at 830. One more look back at the order flow, see if we can get anything interesting in here. There's not huge shifts in here. The range is pretty narrow. From the open at 44s up to 50, 51, back to 46s. Not clearly breaking new ground yet. I'll probably leave it here for you. You can see a lot more orders underneath now than there were above. I could often give a bit of a free clear air to get things going. But a little bit early in the day, perhaps to see some real directional moves. Let's expect a little bit more life out of the market today than we saw yesterday for sure. But just try and be patient, wait for those opportunities to come to you. No doubt there'll be plenty out this week with GDP, minutes, Lagarde speaking later, PCEs out Friday. Just don't go slinging all of your bullets out today. There are plenty of trades ahead of you. With that in mind, trade safe, and we'll be back with you in the morning. If you haven't already clicked subscribe, you can do obviously on YouTube, but you can also see in the description below how you join our daily Zooms if you want to join that as well. Thanks for joining us as ever, and we will catch you.